Welcome everyone. How's it going? Hope everybody had a great weekend.
Yo, River, what's good, my man?
How we doing? Doing good. How are you? You have a good weekend?
Yes, sir. Yes, sir. How are you?
Doing real good. Doing real good.
Oh, that's what's up, man.
Kevin, how's it going?
Another week,
Yep, another
another chat,
hopefully another week of mayhem. Let's keep having
baby.
some fun.
The other day I was thinking, I'm like, yo, why am I trading? But at the same time, it's good that I'm trading.
Yeah, yeah. Sometimes I look at the market, I'm like, what am I doing here, dude? I should walk away. I think that one myself.
I almost walked away.
Nice, Kevin. Hung out with the kid, went to a festival. What kind of festival you go to? There you go.
It's like a Main Street Arts Festival kind of thing, you know.
Oh, sick, dude. Nice.
Where are you from? What state?
Texas, Dallas, Fort Worth area.
That's what's up.
So they got like a Grapevine. They got like over in Grapevine. They got like a Main Street Arts Festival thing.
That's nice, bro.
I had to pay for it also. I had to hit the apex of early.
Got that payout, huh?
Yeah, I'm gonna request 9 payout on 9 accounts
Dude,
like
that's good.
tonight, and that way I can trade the
That's,
other 10. That way I can trade the other 10 this week.
that's what's up, bro. That's a blessing, bro. That's what's up.
Yeah, he's one of the few doing it right on those funded accounts, that's for sure.
Yeah, but I have a question on those. Like, you think it's like it's worth it to get one and just like play it safe, like those, like play a nice safe trade on it and then
Yeah,
keep it building?
yeah.
Yeah,
You,
yeah, I
you
play.
think you think it's worth it to like get
Yeah,
one?
yeah, I play micros on it, man. I have like 4 of the accounts are actually 150K accounts, and one
Yeah.
is a 300K account I'm about to finish passing, and most of them are 25 and 50Ks. But bro, I play like 1 to 3 micros, and if you make $50 on 10, 15, 20 accounts, I mean that's $1,000 right there.
Yep. And yeah, playing them slow is the way to play them, honestly. The people who rush are the ones who it never works for. Welcome. Fitness, how we doing?
But yeah, you got to make it slow and boring, otherwise you'll go through 400 accounts.
Yeah, my internet cut off. Yeah, I was gonna ask. What do you use?
He uses Apex.
Mommy.
Yeah, I use Apex.
Apex.
Mommy.
Yeah, I've gotten paid out pretty well from them this year.
They're all pretty good. Top Step, Funded Futures Family. Those are if you're gonna pick one of those three, in my opinion.
Alright. And you could do options on those only futures.
Nope,
Only futures, yeah, only futures.
not
Only
on those
futures.
accounts. You can trade futures options on just a normal account if you want, but I mean they're basically just SPX. There's not a lot of difference. Some of them trade 24 hours a day though.
Yeah, I heard it closes at like what 5 p.m. and open at 6
Yeah,
every day.
yeah, they close for just that hour, and then for the weekend. But welcome everybody.
That was
Yeah, I kind of expected more of a drop from that sell off we had kind of going into Friday, but
Yeah.
futures didn't really gap down as much as I thought they would have.
I mean, took that nice wick down, I mean, it is kind of, it's basically 60 points off the highs, but yeah, I kind of would expect a little more. I mean, I will say those downgrades, you know, oftentimes met with a little bit of selling, but people tend to forget, I will say Moody's doing it is a big deal. They're definitely the most respected of all of them, in my opinion, the people who give the credit ratings. Moody's is definitely kind of the biggest and best. So unfortunate from them. I also saw that we're definitely having some issues with the UK deals, and then Japan has just said that they don't like the deal that has been offered, so they're actually going to be rejecting that. So not what the market wants to hear, that's for sure. I gotta believe this week though they'll start trying to pump out some more deal news, or I've already seen. Oh, I'm going to try to meet with Xi this week, so we'll see what the market gives us. Got a feeling we're going to have after last week was nice, not, I mean, we had some news, we had some data and stuff, but nice tradable week. Market traded as you would hope it would. But I got a feeling we're gonna get back on that news cycle pretty good here this week. We'll see. Okay, just let me make one more post. Bitcoin people said it's fine. Oh God, it's absolutely ripping. Well, Rudy, how we doing? Okay, give me one more second here. It's fine. Okay, welcome everyone. How we doing? Hope you all had an awesome weekend. Dirty River. Tonight we are going to be talking just Sunday night market scan. Gonna look at a couple of charts, kind of get just some bearings for the week. As I was just saying a little bit, I do kind of think we're gonna get back into some more wild news stuff going on this week. Obviously markets, and we're gonna talk SPY a little bit. First, of course, obviously markets got absolutely clobbered, and now markets have absolutely exploded. But what I've been saying is, the whole way down, I was saying until we have some answers, market can't bottom. We got some answers. Market's definitely trying to, I was saying on 10th or 11th of that month or of April that, market had likely at least temporarily bottomed. The issue that we have now is the market will continue to want good news to keep running. There's no denying we have no deals. We have nothing so far. All we have so far is the really bad tariffs pulled back. And so that's the biggest thing that we have going. That's what the market is running on. The market is, in my opinion, basically saying, they're kind of going to ignore the day-to-day news nonsense, look at the big picture, understand that all sides everywhere are kind of not being fully honest. And what we know right now is the biggest of the tariffs, excluding China, of course, have all been removed. Those are what the market really hated in the first place. So as it sits right now, those universal 10% tariffs, I don't think anybody's too upset with those. But like I said, we put in a gigantic run, $110 off the lows on SPY in a month and a half. It's insanity, well, the market's going to want more. I've been describing it to people as, it's going to need the slow drip of deals or the slow drip of just at least bullish news to continue going up. Obviously, that 600 was, I think, a lot of people's big targets, just get us up there to that big psychological number, and then see what the market wants to do from there. Doesn't want to go push the all-time highs, or do we at least want to get a bit of a pullback? And so obviously right now on SPY, we did get some bad news. I don't know if we're trading yet on SPY. Oh yeah, so we got some bad news. Obviously we're gapping up from those lows because the futures have put in a nice bounce, but still sitting a nice solid, what is it, $5 or so off of the highs on Friday. So if we open around here, going to be a nice little gap down, nothing to get too concerned about. But so with that, let's get into it. Sunday night scan, as I said, for me, we're going to start with SPY and QQQ. That's always what I like to start with. And then we're really just going to hit on a couple of those big tech names. For months and months, tech just wasn't my favorite thing to trade. Everything was just, it was pushing highs, but it was kind of faltering. Obviously, it was quite a bit of fun on the downside, but now so many of these tech names have put in such big moves down. They've got way away from the super over, maybe too high, who knows? But they were pretty overvalued there for a little bit. And so it's nice to have these things back into some form of reality. Obviously, if we're discussing, some of the more traditional things that people look at when you think of overvalued, your PE ratios, things like that, many of them are still overvalued. I don't really care. I more care that we have now got them down to some points on the chart where we actually want to put on some trades. I'm covering for 1K tonight. Everybody does these, everybody does lectures a little bit different. What I like to do is just kind of pull up these charts, and I don't want to call it a support and resistance lecture, trend lecture, or anything like that, but I just like to pull up the charts, kind of mark the areas of interest for me around where we are trading, and build a bit of a plan. As I said, we still have so much news influencing the market right now, but I still like to be able to pull up a chart and kind of glance at it and say, where are we trading? Am I a dip buyer here? Am I a short ripper here? How do I want to be trading this? And so I'm just going to show you guys that's what I do, and we'll go through a few charts tonight. I'm going to show you what I do. Obviously, because I only chart, well, I can't say I only chart, but because I mostly chart on the daily time frames, rarely do I have to add new levels or remove levels from my charts. We've obviously picked up some big ones in recent times. The places where we've taken some of these bounces have for sure been worth noting. But I'm going to show you what I do, what my charts will look like, going into tomorrow, and the areas of interest that I'll have. So obviously upside right now, whether you put it on your chart or not, it doesn't really matter. We know that if we get up to 600, it is the last place that you want to be long on the chart. If we're able to get a break above it, nice, we can look for some pushes above there. But for right now, to me, our giant overhead area that we're concerned with is that 600. Of course, if we break over it, you can kind of look for these pushes back to, some of these all-time highs up here, and some of these maybe little bounce points that we've had through here. So really 600 up to that 604 area, I would personally be very cautious long. If we're able to find some buying over there, that's when I'll start looking for the push to those all-time highs again. Obviously, we're kind of knocking on their door already. But for me, as everybody knows, when I chart support and resistance, when I do any charting, like I said, it's on the daily, and I'm always just looking for any sort of major highs and lows that we've had in the areas that we are trading. So these aren't going to be your scalping levels necessarily. A lot of my scalping, obviously, if my daily levels line up, that's where I'm going to get involved. A lot of my scalping comes from more the intraday, rejection and bounce points. But if I'm really looking at SPY right now, these are my areas of interest. Obviously, as I said, 600 is going to be kind of the no-go zone for longs for me, really even up to this 597. Why do I say 597? We can see the reactions that we've had previously off of that 597. If we're above it, it can provide a really nice bounce point. But if we're trading below it, that's where we're seeing some really big rejections, as I said, or some big breakouts. But that 597 up to 597.40 area is always the touch and go area. However, market is still overall bullish. Yeah, well, I mean, I guess it depends how you look at it. We're still down, whatever it is, 10% or 5% off a high, something like that. But market's wanting to buy. So for me, above the 200 day, above the 50, above the 20, we got the 20 crossing back above the 50. Of course, it's just this parabolic run. We still have to remain in a bit of dip buying mode. And so for me, 590. I mean, 590.6, 590, little zone right here. This is where we want to be dip buyers. Obviously, we're taking this nice gap down. We're trading right around our 590.6 anyway. We'll see where we end up opening. But if we are opening below there, then for me, and this is where, this is really what my plan for SPY tomorrow is. wherever we open around, wherever we open on SPY, 590 is really going to be my personal line in the sand. If we're pushing up into it, I'm likely going to be looking to short that bounce. If we're breaking above it and retesting it, I'm going to be looking to take those longs, maybe up to the 595 area, same as on the downside, all the way down to this 586.30 zone. So we have some very, very nice line in the sand trading right now. This is, my favorite times to trade in the market is when we're trading around these major daily areas of interest. The reason I like that is it's often where we get the nicest, cleanest moves. You aren't going to battle choppier moves. You aren't going to battle any of that stuff. If we're breaking these levels, we're likely selling. If we're, breaking below or breaking and retesting upside, we're likely going to get into buy mode. And so I love it when we can have just some nice, really defined levels on the chart that we want to trade around. And so for us, that's SPY right now. I will say, I personally, and this is personal opinion, I think that this market's kind of getting ahead of itself as far as the buying that's going on. We've obviously had some better than expected data, some worse than expected data, some better than expected earnings, some worse than expected earnings. To me, we have a little too much uncertainty for the market to be running like it is. So everyone wants to say, are we going to crash, blah, blah, blah. Who knows? Nobody actually knows what the market is going to do. But for me, my real line in the sand is down here, 200-day up to 575. That, what we have there is that's where the market is either going to start getting clobbered again or take the big old bounce. So I will personally remain somewhat in the dip buying mindset all the way down to 575. I mean, I know that's $20 below us. I get it. That's a big move. Obviously, we've had very exaggerated moves in the market lately, so $20 doesn't seem like a lot, but in reality, $20 is a pretty dang big move on SPY. So any move down to this 200-day, I'm still remaining in that dip buy mode. If we get below it, awesome. I'll happily be short in the market. I'll be looking for this gap fill just like everybody else is down to the 567. Definitely a pretty big gap we got right there. We know market likes to fill gaps. We never know when it will come, but it could present a very nice trade if it does come to us. And so that's pretty much my stance on, SPY going into tomorrow. That 590 zone is where I care to be trading. Any of these dips down to 585, 586, I will be looking for bounces. The final thing that I do want to point out, and it's kind of tricky just because of, as I said, how the market has been trading. We of course have a few new trend lines developed. This one obviously going to be our most major trend line that we have so far. And then to me, our less major one is going to be something around here. I always like to go from lows to those more extreme higher lows or whatever they might be. So you can see we also have a trend lining up real nice with this 590 zone that we, depending where we open, we're going to be trading very close to this trend. So this can kind of, it's not the most major trend, but if we're breaking below it, we can kind of look to short some bounces up to that 590. As I said, if we're kind of dipping back into it, we can still look to be dip buyers there. But you guys know me, I always try to, at least take note of any trends that can be happening. So that's it for me on SPY. Like I said, pretty cut and dry. You won't catch me long at 600. You won't catch me short down there around 575. And then really 590 is kind of my, safe point to maybe get into a dip buy, or if we break that trend, bounce back up and retry 590, I'll probably be trying to short that bounce up to it. So any questions there? Like I said, pretty dang simple. And you're going to realize that basically every chart has the exact same setup right now. So there's going to be a lot of repetitive talking. I just kind of wanted to get my levels out there to you guys. Okay, cool. No questions on SPY. Next one we're going to check out, obviously going to be QQQ. As you can tell, chart looks basically the exact same. We're going to do our same sort of deal. We always want to take note of our major highs. Anywhere we've had major highs, major lows, big bounce points. I've been really all three of these little bounce points played really nice for us on that way down. And so we'll see, they're kind of acting as our support currently. They worked pretty dang good for us on the way up. And then, of course, all of your major highs as well. If we assume those downside ones are working for us, we, of course, want to assume the upside ones are going to be working for us. But as you can see with QQQ, very similar setup. Again, if we want to draw our trends, here is one of the trends. Here is the less major trend. You guys are seeing a pattern here. Most charts look very, very, very similar right now. The one thing that I will say on QQQ, as far as our daily levels and why I'm going to be kind of focusing a little bit more on tech. So we got a lot of junk right here. That's how I've been describing it. I mean, I probably honestly put a line there. We got a lot of junk right here where we're trading. The deal when we have a lot of junk like this, consolidation, like it was a more choppy than SPY was at this time. Well, what this provides us is actually a very nice range to trade in. Obviously, the most major part of the range is down here near the 510, but when we start looking at this 516 to 519 zone, we can see the moves that we get above it. We can see the moves we get below it. Again, moves above it, try to hold the moves below it, big moves above it. This is a wonderful zone to be trading in. Of course, a little bit bigger, but any, couple buck, $2.30 zone, whatever it is, any moves back into this trend, these levels right here are where I likely want to try to be a dip buyer. We'll say I don't exactly know where Keys is trading right now, even 517.50, right in between them. That 516, that's really, again, going to be kind of the area where I am looking to buy the dip on here. Stops under 516, 515. If we can work down all the way into this trend, I'll still be a dip buyer. Even though we're below our levels, I'll take a risk on the trend back up to 516. However, breaks below trend, exact same setups as SPY, and he bounces up to our 516 to 519 zone. I'll personally be looking for the short trades. Just the better risk reward to be trading it that way. And then obviously, if we're able to get our push, you can see 526 to basically 528 zone. That's going to be the no long zone for me. I'll have zero interest in being long tech up here. And honestly, with the 530 overhead, that whole little $4 area, really just going to be the no long zone for me. Of course, if there's scalps, dips to buy intraday, that's a different thing. But that's where I will really start easing off at the longs, just because when I look left, I know that this is the biggest resistance on the chart. Well, all-time high, but right around us, biggest resistance on the chart is right around in here. So that's when we typically don't want to be in the dip buy mode. Of course, as I said, scalps and day trades are fine, but as we start pushing above there, I'm going to feel much, much more comfortable. And basic traders equation risk reward is going to be substantially favoring the short side as opposed to the long side up there. So like I said, almost an identical chart to SPY. They're moving together very, very well. One of the interesting things that's going to be the next chart that we take a look at is kind of the whole market is getting bought. This isn't a tech only rally, which I think is very good. And for those of us that do like to trade some of the slower moving names, your Coca-Colas, AT&Ts, Bank of Americas, those are all seeing a lot of buying as well. So always important to always kind of analyze the whole market and say, even if I'm telling you right now, I want to be short at 530, if every single thing in the market is ripping and getting bought and tech is on the moon mission of a lifetime, I'm not going to jump in front of it. We just always want to be aware of those major areas. So any questions on QQQ? Like I said, pretty dang similar to SPY. I thought I saw a question, but now I don't see a question now. Colin, how we doing? Okay, so next one we're going to talk, and this is definitely a much less looked at thing. You might have heard, me, Tilio. I mean, honestly, probably even 1K at some point has talked about this. And so the chart that we're looking at here, this is RSP. And so for anybody who doesn't know what RSP is, when we're talking about SPY, it's obviously an ETF issued by a company that has weights. We know Apple is 7% of SPY or whatever it is. I mean, I don't remember off the top of my head. Well, RSP is the equal weight S&P 500. So, Apple doesn't have any more weight in it than AT&T does, And so I always really like to, and I don't trade it often. I will say it's perfectly tradable, and a lot of people do trade RSP. I don't trade it often, but I personally use it for more overall market sentiment. So we kind of want to do this, we always want to do the same thing. We always want to chart our support and resistance is the same. But as I said, I am more using this as a market indicator to tell me, what does the overall market think? This is going to be your really, really easy way to see if, rallies or dumps or whatever they are actually a market-wide situation. And so, again, on RSP, one of the main things that there's a couple things I want to point out here. So the first one is its selling started a little bit more before the more dramatic selling on SPY and QQQ. It was obviously weakening into the end of last year. We can see that there, as the election day, mayhem kind of ended, and the market tried to come back to reality a little bit. RSP was kind of leading it. Well, what does that tell us? That a lot of the market was selling. It wasn't just tech. It wasn't just SPY. This was showing us a lot of the market was selling. So we're breaking above our trend. We're holding above our trend. That tells us that this is a market-wide rally. I mean, you kind of have to be blind to see that. You basically have been able to throw a dart long and make money, on anything you want. But we're seeing some actual strength in this market. Kind of one of the last ones to reclaim that 200-day, but seeing strength market wide. Obviously, as we start pushing up into this 182, 183, that's where we're again going to want to ease off. That's likely going to be right around SPY 600. That QQQ 530 area is going to get us up to here. And because so many things that are in SPY are also in QQQ, are also make up RSP. So we can use this to tell us how the whole market is doing. Well, one of the things that I like to take note of, and one of the ways that I like to do this is we can see RSP on Friday was a beast. It did not stop. It was much stronger overall than SPY and QQQ. It just ran all day. And so what does that tell us? You might have heard, like I said, so we can even, look at SPY. Nice day on it, smaller day than RSP had. QQQ, again, nice day on it, but didn't even crack a new high. So what RSP tells us by setting a new high, big, strong, bullish day, they were buying a lot of stuff, but tech was not the focus. That's something that we can take note of. And so you might have heard me or Tilio or people, maybe 1K talking about, advancers versus decliners. And what do we mean by that? It's how many things were going up in the market and how many things were going down in the market. Well, this is the type of thing where we can very easily look at it and say we had many more advancing stocks than declining stocks in the market. And this was, when we compare it to QQQ, not a tech-led rally. So we're seeing buying market wide. That is what we want to see for sustained running in the market. Obviously the wrong tweet, the wrong news, whatever can come out at any time and we can, get back a bunch of the gains. But we can use RSP, as I said, this 182, 183 area, likely going to be your 600 on SPY, your 530 on QQQs. And then this 176 area, going to line up very, very beautifully with those downside trends that we were discussing on both SPY and QQQ. So if we get the pulls back to the trend on SPY, if we get the pullback on the trend on QQQ, and then we see RSP pulling back to its big trend, maybe even its 200-day, and we start to see buying on all of them, this is going to be the thing that tells us, is the market going to continue rallying? So again, you can trade RSP. I personally don't, but definitely very, very tradable thing. Much safer, slower moving than your SPY or QQQ are going to be. You aren't going to get the $5 moves on it, but you can get some nice $1, $2 moves on this thing pretty dang consistently. And as I said, it's just one of my preferred ways to really analyze how is the overall market doing, not just your tech heavy SPYs and QQQs. So any questions there? No? I'm either doing good or you guys are being quiet tonight. Okay, next one we're going to talk Apple. So Apple's one I really have my eye on. I've been putting some trades on it lately. One of the interesting things about it, it is still the absolute laggard in the market. When we it's still, I mean, I guess I don't know exactly, but we're still talking 17% off highs, 18% off highs on Apple. Then when you go compare it to something like a Microsoft, which, granted it's all-time highs, we are looking much, much better on Microsoft, down 3% off all-time highs. Look at your Amazon. So this is kind of the other laggard. We're sitting 14% off highs. Google, this is the one that we're going to talk this one soon. This is the shorter 1879. So you can see tech still a little behind. Some of our other, our random names, we got our Tesla, obviously just still clobbered off all-time highs, but a massive move off lows, 55% up off lows. Huge upside moves on Tesla. So Apple's the laggard that has my eye. And why does it have my eye? For multiple reasons. One, we're getting this nice clean trend break right here. Obviously been looking for this one. Our more major one, still obviously miles below us, but we know where support is on Apple. We know where we want to be dip buyers on Apple. So again, we do our exact same thing that we do on any chart we want to do. Look for our major highs and lows anywhere around where we're trading. Try to get ourselves some levels. And we aren't going to go up and get all the all-time high stuff just because we're so far away from it, obviously. But get a few levels on Apple. And now we can start to see we got a really nice setup on Apple to try and catch a bounce. Obviously, we aren't necessarily trying to long it off this 210. I won't deny this is the bottom of the little range we have here, but pullbacks down into this 206, 208 area with some slightly wider stops. This is where we want to be looking to get long on Apple. The advantage to getting long right here, we have 20 SMA, we have trend line, and we have the bottom of a gap. So the risk reward when we start looking at Apple off this 206 to 208 area is phenomenal. If we start selling below this wick, below this trend, below this SMA, we are most definitely going to keep selling. So the deeper pullback we can get into basically our 206 to a 650 area, we want to be buyers. We got basically $1 of risk, to where we stop out. And best case, closest target is going to be our 208.25, and best case scenario we push right back up to the top of the range, 214. So we're talking a $1 risk, $2 risk for a potential $8 upside move. However, if we get stopped out, we get the break, we get the retest, we are 100% comfortable being short right here. So as I said, I love line in the sand trades. This is a perfect example of a line in the sand trade. We have a very, very obvious spot to be a dip buyer. That same spot also provides us our best possible entry for the short trade to potentially fill this gap. So again, it's going to be basically just the inverse of the long trade. We break below 206.55, get a retest. Stops are going to be over 208.25. So we're going to got about $1.75 a risk on this trade. And we're looking for a potential $6 to $7 move down. So beautiful risk reward on Apple. That's why I have my eye on it right now. I was even playing it, this whole week, kind of buying these dips on it, trying to catch that upside move that never quite came. Let's see, Apple's probably trading now too, trading under that 208. So this is one that, going into the open tomorrow, we're already under our 208.25 level. I am likely going to be looking to dip buy on Apple early. Any strong wicks down, I will try to buy the early weakness on Apple without a doubt. If it shows up, of course, we could get news overnight where everything opens green. You never know. But very, very cut and dry spot to trade on this thing. So any questions on Apple? Like I said, nice and simple.
Yes. So would you go 2 weeks out, 3 weeks out on Apple instead of the weeklies on Apple?
No, because I am not ready to be fully long on Apple. So 2 weeks tops. Realistically, if we get this pullback on Monday, I'm going to want the move up by Tuesday. So I'll comfortably swing a weekly if it's gone my direction. If I'm green, if I'm green on the trade, I'd be perfectly fine swinging an Apple weekly from Monday to Tuesday, looking for some continuation to the upside. If we can print a nice little ugly candle off the open and flip that thing back up to maybe slightly green or even flat, I'll be perfectly comfortable swinging on that thing because I'm not fully ready to be long on Apple. I will say nibbling Apple shares at $200, perfectly fine. If you got that long-term mindset, you want to add some to your Roth, 210 is a great place to be, adding a couple of Apple shares. Can you see some pain? Absolutely. We were trading 170 not even a month ago, but great place if you are, and as you should be, bullish on Apple forever. The one thing that it's fighting right now is that it's got Trump mad at it. Trump doesn't, I thought we all knew that Apple would be moving to India if they left China, not to America, but that was apparently news to the administration. And so there is a little bit of tension going on between Apple and the administration. So that's why we have to be prepared for the short trade if it comes up, because, news will be technicals every single time. And if Trump, I got caught on the wrong side of it even this week or last week. Apple looked good. It was ready for that bounce. And then unfortunately it got tweeted about that night and it did not take that bounce and it was wrecked the next morning, So while I'm not fully ready to be bullish on Apple, unless we're talking long-term view, wonderful place to put on a short-term, it could turn into a scalp if it's another scalp, day trade, or swing trade. I like all three of them off of this zone. Of course, swinging in this market, your risk is like 10x, so you always got to be cautious there. But we just want to be prepared for either side of that trade. So what I'm saying, not necessarily buying shares, no, but I'm buying the dip. Like we get this dip down into here, I'm in 210 Apple calls is basically what I'm saying. 210s, let's see what the 212.50s are trading or whatever that next strike is. But we get that dip down to 206, I'm likely going to be looking at either those 208.50s or 207.50s or the 210s, whatever it is. So next one up, Google. Weak name. Hated name, thing hasn't been able to catch a bid to save its life. The main thing that I'm taking note of, we have a nice little push right here, rejections around the 200-day. So I want to take note of that trend. Obviously, it did break its most major downtrend, but it just hasn't had that follow through just yet. Like I said, it's down about as bad as Apple. So again, the second biggest laggard around as far as, bounce size, everything that it's dealt with. But same thing, we chart everything the same. We don't care what it is or what it's doing. We want the charts to tell us what to do. So, let's see. I go on a little bit more time. Sure, I got those. And that's my final one. So Google, as I said, for me personally, short biased on this thing, can't catch a bid. Even when everything was like running, yeah, it's set all-time highs, but not like everything else was setting all-time highs last year. Google has just been this laggard. And one of the big issues with Google right now is it's fighting the antitrust monopoly lawsuit. to me, it's a no-brainer that, I mean, they are a monopoly, at least in my opinion. You look up the definition of monopoly and they pretty well check all the boxes, you know? So one that I'm not ready to be long on. Again, Google is one that I can't, you know, recommend against shares or anything like that. But you know, there's a lot of economists out there, people much smarter than myself, discussing Google's parts are worth more than its whole. So if they do get split up, while it might technically be negative for Google, there will be more money made overall if those companies split up, but it could be a little bit rough for Google. So, what am I looking at for a trade on this? Really, I'm not interested in longing it, as I said. Um, I don't. Can we get the breakout and can we get the push? Absolutely. And we have that very defined spot where we think that happens. And it's the 200 day. That 170 up to whatever that is, 170.92. That's the area we really need to clear. Even if we start looking left on the chart, we start clearing that 170. We should go see 175. We should go see 180. We should go see 185. No questions asked. However, this is some weak price action to me. With the buying that we've had in the market, I mean, I'm not going to deny it's up, you know, 15% or whatever it is off of the lows. But with the buying we've had market wide, Google just hasn't been able to keep up with it. So for me, my ideal entry somewhere up in here. Up to that 170.68, that 200 day. If you want to take the early entry 169 and leave a little room to add in case we bounce more, the risk reward here is a no-brainer for a short. Obviously, this thing's going to be opening much lower. I mean, it's already down to 163.80 area. So we're going to be opening much lower, you know, somewhere down here. I'm still not ready to buy the dip on Google. I would like one more push up, get me to that 200 day. Maybe I'm right, maybe I'm wrong, but the risk reward is just awesome on Google right there to try to be short on it. If I was looking for a real dip buy, I would want to see a much more substantial pullback, really about this 160 area, get us lined up with those SMAs, try to catch the bounce off of there with the tight stop below it. But as I said, Google's just not one I'm personally really looking long on. So, any questions there? That one's nice and simple. Short 170. I mean, that's best case scenario. Short 170, 169 area on Google. Stops over 171, and you're gonna be happy. Yeah, this is a little bit of a three push wedge. Good eye there, Rudy. You see what I'm seeing. You know, you've been doing enough of these things. So next one we're gonna talk. One that I never talk about. I hate it. I hate to trade it, but it's a momentum monster, and there's no denying that this thing has been putting in some moves that have been worth trading. Even I've gotten involved in a couple of them, as much as I hate to say it. Tesla putting in some great moves, pushing into some real big resistance. Obviously taking a really nice bounce off the lows. Like I said, you know, one of the biggest bounces off the lows. This is one that I've actually been. What is that? Just clicked the wrong thing. Oh yeah, I did. So this is one that I actually ran some fibs on. Uh, if I don't remember to come back to your Apple question, we'll go back and look at the chart here in a second. If I don't remember to go back to it, remind me though, and we'll go check it out. So I pulled some fibs on Tesla because it has put in a gigantic move down. You know, I mean, this thing did 488 to, I mean, I think it hit 200 in the after hours one day. But 488 to 215, 216 area, we'll call it. Well, I like to know where fibs are. We can actually, I probably should have showed you, I'm looking at them on SPY and QQQ too, much higher on SPY and QQQ. So we are coming into, in my opinion, the no long zone on Tesla. 352, you can see, we rejected the 50% fib, pretty close to perfect. Next area, psychological areas above there are going to be this 360 to 364 area. Fundamentals are horrendous at Tesla. This thing likes to run on news. It loves to get that momentum going up. We're coming into one of those spots where you can make an argument for a little sort of double top, 50% fib, gigantic psychological numbers, gigantic daily level numbers, where we can almost consider jumping in front of this train. If we get a push up there to 360 on it, yeah, so if we get a push up there to 360 on it, obviously you want to be short there. Short at 360, 361 area, stops over 364. I mean, you could even run it out to 367, but that's just too wide of a stop, you know. It's getting to a point where I want to look for a pullback on Tesla. We have to remain, you know, I hate to even say the word, slightly bullish on Tesla, obviously, and dip buying is likely the move. But when we're presented a setup like this, and again, we can, you know, like what I always tell you, always look left. Look at what happened here before. And we've taken massive drops off of it. The risk reward dramatically favors the short here. So that's what I'm watching for on Tesla. I would love a push to 360 to short on that thing. Obviously, those contracts are stupidly expensive always, so it's a hard thing to make happen if timing doesn't line up right. But no brainer short right there. However, you always have to look at the other side of it too. We know our spot where we want to be short. It's Tesla. Jumping in front of the momentum, whether down or up, oftentimes is a death wish. So if the short doesn't work, I'm perfectly comfortable being long above 364. You know, so, as you've seen with all of these trades, you guys see where I like to trade at major points on charts. That's the best thing we can do. We push up here to this 364 area, break above it, retest it. Very, very easy long. I think no questions asked. You will. That's the wrong thing. No questions asked. You will push up. You'll see this 372. You'll likely see this 376. And then that 380, 384 zone will come real, real fast. So if you're like me and you love to jump, Crash is calling me out even. If you're like me and you love to jump in front of the train that is Tesla, we're coming up to a spot where the risk reward is actually worth it to kind of jump in front of that train. But if the train's not going to stop, then get off the tracks and let the thing run and ride the wave up. I won't be riding the wave up with you. You know, principles dictate which way you trade on some things, and I don't trade long on this thing, you know. But sitting at a beautiful spot to really put on a trade there. No questions asked. So any questions on Tesla that don't involve my personal opinions of Tesla? Okay, we're all good there. So oh, dude, the worst, the worst. We're gonna do one more, and then I got to answer that Apple question, and then we'll talk PLTR. But we're gonna talk the greatest stock that is traded on the American stock market, AT&T. There's not a stock that is better than this one. If you guys were unaware, we caught a nice move on it last week, but we have a nice defined, at least in my opinion, range rocking and rolling on AT&T right now. So we're coming up to that danger zone, obviously, where we probably don't want to be looking along this thing. And so we're getting this nice defined setup. And we'll mark a few of our levels on here. And then I'm excited to talk about this because I get asked all the time because, you know, I trade daily levels. And so most people, they're like, well, when do you delete them? The answer is never. And I'll show you why. So we got a couple important levels here on AT&T. Obviously, you know, this 2780 up to 28. You don't want to be long there. We start to break this trend, get a retest to 28. That's where you want to be long. Yeah, Crash, you got to get out of here. This is a real company, unlike ASTS. So people always ask, when do you get rid of your daily levels? The answer is never, because sometimes you have to come all the way back here and you have to come back to 2019. You know, this is 6 years ago. This is the last time we were trading these levels on AT&T. So this is where we have to come to identify our upside levels. You might also notice we go way over here where we were just marking 28s, 2780s, you know, those are pretty dang big levels. 25, pretty dang big level. Well, when we come again all the way back here to 2019, what were the big levels? 27.80 and 28. So they will always work. They will continue to work over and over and over again. You know, as we've been pushing all these highs, these are where my AT&T levels come from. So that's why daily levels are amazing. 6 years later, we find ourselves back at these same levels, and these same levels, you know, I just added that 2684. These same levels are still working. So AT&T for me, again, you guys might be noticing a pattern in all of my uh you guys might be noticing a pattern in every single trade I've talked about. Cut and dry. If we're pushing up to this 28, we're pushing up to this trend, you can absolutely look to short it. It's third test on the trend, fourth test on the trend, I'm not shorting it, but third test on the trend, I'll give it a try. And if we can get the little push above 28, our stops are only going to be 15, 20 cents above us. You could even run it to this previous high if you wanted. But if I start to see the buying above there, I'm not going to be in there. You know, I'll risk the 15 cents, a few bucks a contract, no big deal, and look for the break and retest with a continued move, push back up to that 29 level. So loving AT&T. Again, you guys have noticed every single thing I've talked about, SPY, QQQ, Apple, Google, AT&T, all of them very similar setups, you know, different charts, but all at points where we either have a nice move of continued upside or a nice rejection down. Of course, a lot of those because of how bullish the market is. If you're trading the rejection down, you don't want to be greedy, and you really want to be trading that move down to a point to buy the dip, because that's what the market is telling us to do. Whether you or me or anyone else agrees with it or not, doesn't really matter. So all of these putting up really, really nice areas for trades. So that's all I'm going to talk tonight. I know we had a couple of questions. We should have we're going to do Apple first, because somebody was asking me, they're in a 200 covered call on Apple. I believe that was Geo. Yep, Geo. So really tricky. The question, you know, there's a few questions as far as roll it, blah, blah, blah. I'm assuming that you maybe sold it somewhere down around here and you kind of had this gap go against you. Feel free to correct me if I'm wrong. We're going to need a pretty substantial breakdown over the next 2 weeks to get you back under that 200. So there's an issue. You can roll it. I don't think you should. I could absolutely be wrong on this. Sell to open is a lot more dangerous than people make it out to be. I mean, ideally, you got those 100 shares of Apple. Ideally, you're in profit. And ideally, you sold a strike that if your shares are called away, you're still making money and you aren't going to be disappointed in it. But you know, right now you got 1,100 bucks. Well, I mean, I guess we're way below that. We're at 208 now. You got 800 bucks of intrinsic value. I don't know how much you got when you sold that 200 call on it. But you're going to need a pretty big pullback over the next 2 weeks to get that. Also, selling a covered call is taking a bearish stance on a stock. So when I look at this chart and I say, okay, we've reclaimed 200, the psychological 200 number, we've reclaimed some more big levels, we've broken our daily trend, we've reclaimed SMAs, you are technically short on strength. I understand how a gap against you could kind of get you on those things, but it's hard for me to recommend the roll on Apple. And don't get me wrong, the right news can come out and you can be deeply, you know, that thing can be worthless before expiration, you know, but you need news. You know, you need news to get us back under 200. So I personally can't really recommend the roll there. That's just me. Yeah, and if you got it at 500, if you got it at 500, I mean, you got 800 in intrinsic where we sit now. you might be able to squeak out if, we give up this 206. You'll probably find yourself in a little bit of profit, but once you find yourself in profit, I would be trailing those stops, and buy that thing back. You know, I wouldn't let it go back red on you. But if you're, I mean, well, $300 is a lot. You're what? You're 60% red on it, technically speaking. If we're at 800, but we get a little pullback, you might be able to sneak yourself some profit out of that thing. But the other issue is if we start selling, then VIX is going to be increasing, the IV is going to be increasing, and the value of your contract is likely going to be increasing too. So you're going to be fighting that a little bit. But I just can't recommend the roll on, could this be a little triple top and we're going to crush and we get bad news? Absolutely. But it's pretty risky. You're short on strength, no doubt. What was the other one? Oh yeah, PLTR. Gosh, I hate this stock. So I mean, honestly, it's hard to know what this thing's gonna do. It's fundamentals don't matter, technicals don't matter, obviously. So main thing that I'm looking for, you basically just got to run your fibs to those previous all-time highs and use those as your levels. This is what you have to look for, in my opinion, upside on it. Obviously, if you want to put a level, you should put this rejection, that all-time high rejection level. Maybe a little micro double top right there. 130, treat it as your line in the sand. Over 130, look for your 133, 139, 147. Obviously, these are gigantic moves, but that's how I'm going to look for levels. The only other thing that I ever really do when we're trading at these highs like this, I always like to put the B bands on and understand, your standard deviations aren't really going to want you to get past there. So, if you do buy the break of 130, look for 133, maybe it's 137, 139. That one lines up exactly with 38.2, but that's a $25 or $15 rip. Sorry, $17, $18 rip. So you gotta, as much as I hate to say it, remain bullish on it. Nice push up, nice hold of previous all-time highs. Not really where you want to be short. I wish we could get this trend break. I'd short this. Ooh. I'd short the trend break back under 125 previous all-time high, but I ain't long in that thing. Okay. Any other questions? We got ourselves another 5-10 minutes. If anybody has any questions, any charts you want to look at some levels, or even questions about things we talked, your spies, QQQs, Apples, Googles, Amazon. Did we talk Amazon? Yeah, we can go back and check those SPY levels. Like I said, I mean, these are going to be the levels that I'm personally trading all around here. I'll take those B bands off. They're hideous. So these are my SPY levels. Like I said, couldn't pay me to be long, pushing up here into this 597, 600 zone. If anything, I'd likely be looking to be short there. Dip buys down here, 586 trend. Even dip buys off the 590 zone. That 590 really has to be your line in the sand. We're breaking trend, we're breaking 590. Look for that downside there. But hold 590, look for the continued bounce to the upside. And then 600, and then again, get down here, this 575. I mean, really, I'll give you the real zone that I'd want. Yeah, really that. Yeah, really 575 to 576 zone. I'm a dip buyer right there, no questions asked. If that breaks, we'll be well below trend by then. Super easy short to try to catch at least most of this gap fill back down there to about that 567. Costco, yeah, what's that thing up to? Ooh. Look, here's an example of the last time I pulled fibs. This thing is just such a beast. These contracts are just so expensive, it's hard to trade it anymore. Wow. Actually looking pretty nice, huh? That's gotta be a trend break there. Oh, man. Well, I mean, obviously that 105 or 1005 was kind of the spot. Nice little break, filled the gap. Oh, I guess I had a wick, but filled the gap. We get my SMAs on there. Ah, that thing's a beast. Easy to stay long over 1005. I mean, honestly, easy to stay long over 1025. Stops over 1018, 19 zone, break back down. But as I'm looking at this now, this thing likely wants to give you at least one more little push up. 1,050 seems like it's probably gonna come pretty quick. But if you're buying this, if we get a dip down to basically 1,020, I'd probably buy that dip. Look for the moves back to these highs, 28, 35, and then, 35, 40. And if you're lucky, push it at 150, 53 zone. Oh, there you go, Kevin. Yeah, I mean, that was money right there. Yeah, and got the crack over 1,000, lucky for you. Nvidia. Yeah, see, kind of like everything. Everything's just pushing up to this junk zone. Gotta be honest, probably not long Nvidia around here. Let's get a new one. Chips have just, well, when we finally got that dump, chips were finally worth the trade. Less so now. Back over our 200. Look at that thing, dude. Nvidia has done absolutely nothing for so long. Dead money for, God, almost a year now. That's insane. To just being the greatest of the great. Don't get me wrong, some great dip buys throughout it all, but dead money. Well, to think you made more on an AT&T for the last year than you did on an Nvidia. Yeah, not where I'm long. I mean, I guess we cracked this 136, 137 zone, look for that push to these previous highs 140, but then you gotta kind of just get the hell out at that point. I mean, you don't want to be long into these highs at all, in my opinion. I've been preaching that for a long time. Just kind of dead money. I'd have interest in Nvidia if we get a pullback to 120, 200 day again. But at this point, I just don't really care about it, in all honesty. You don't like that answer, Cash? Or did you like my AT&T comment? It did, dude. It did. That's crazy. I mean, it's wild to think, like, at one point, like, if you bought shares last May, there was a couple of days where you were red. There was a couple of days where you were red. It's rough, not on T. This thing, dude. If you bought T last if you bought T last May, you're up 50% or more on shares. Way better investment. You got 40 shares to go at 159. Oh yeah, you're scared of that stock. Me too. Me too. I mean, you're green on it. I mean, you don't really gotta be scared though. I mean, 159 was a little high. It was definitely like a chase. Google's just a hard one. If it doesn't get above this 200 day, we're definitely going to see some more downside. Not to say it can't, eventually start ripping it, and it will eventually start ripping. But this, if they were for a trade, not a long-term investment, this 170 area was the spot to be exiting those things, in my opinion. Yeah, there you go, Kevin. I like that. I like that. Those are going to work. Those are probably going to take you in the money or close to in the money before earnings at the rate they're gone. Yeah, I like cost. But Google's fine to own, own that thing for sure. I mean, it's fine to own, but uh, you know, these old 2022 highs before the selling started, it's kind of where we bounced. Breaks under there where you want to start to get worried. But pushes up into that 170 or at the very least worth a trim on it. Okay, well, if that's gonna do it, everyone, thank you so much. I love doing these Sunday scans. Meta, yeah, we can trade on Meta. Why not? I used to trade Meta a lot. I traded a lot down here. I haven't touched it in forever. Norbin. What'd we get for Norbin? Nothing good. Oh, so very wanted to. Yeah, get back over that 640. It's likely gonna take another bounce up there. Yeah, you get over that 640, you'll go see 650, 660 again for sure. It's probably a pretty dang nice trend bounce it took right there. Yeah, pretty dang close. Yeah, yeah, you can be a dip buyer even this 630 area. 630, 640. I'd probably be looking to be long somewhere down into there. At least for mid back to 660. Maybe you get lucky and catch the breakout. Depends what the market wants to do, of course. But break under there. It's probably a pretty sweet short. At least go fill that gap. Yeah, break under 630 and trend, short that thing to the top of the gap around 621. And then if you get that break under 621, you'll likely go see the 605 to 610 area. Oh, there you go. That's a sick one, Kevin. No, Gio, I'm never talking shares. I don't think, I mean, not, it was sweet of you, but I mean, you can always nibble shares, but nah, I'm never talking shares. I'm talking contracts, and I'm likely talking at the money contracts, or on something like Meta, you can obviously get $5-10 out of the money and be chilling. But nope, nope. Dip buyer on options for a short-term bounce. That's it. We aren't um, yeah, we aren't out of the woods economically speaking at all. So, I was obviously telling people to start nibbling some dips back in April. I didn't, you can even go find my post. I said, I think bottoms, I think I said it on the 10th or the 11th. I said, pretty sure bottoms in, start nibbling. I don't think it'll be a straight line up. We got a straight line up though. And so at this point, yeah, I mean, I was all about people starting to buy down here, 500s, 510s, 520s, all those names beat up. But I didn't think we were going to be at 590 a few days later. And now I'm feeling a lot less like people should be buying. Not to say you should be short or anything like that, but now you want to start to be a lot more cautious. Yeah, short-term stuff, you know what I mean? Even on those things, your big beta, your big movers, your Teslas, your Metas, your Costco's, all of those put in really big moves. If you're planning on a day trade, then you don't have to buy a couple weeks at a time, and if you get that move quickly, there's no reason to swing. Market will always give you another entry. So I'm just looking to dip buys at those points with tight stops. Maybe my move comes in a day, 2 days a week, whatever it is. I just know where the points that I am interested in being long at, and when those levels break, I'm no longer long. Maybe like I said, that happens in a day or a week. I'm typically how I trade though. I try to trade important daily levels that will provide volatility quickly. That's my goal. If I can avoid swinging, I avoid swinging. So that's just me. I mean, I won't say it's dumb. It's fine, little diversification, slightly lower fees on those VOOs, but most people will never own enough VOO for that to matter. But SPY and QQQ have been people making people millionaires for 30 years, so you can't really go wrong with them. Okay, let's see, did I miss any other questions? There you go, Kevin. That's a sick one on those Costco shares. I don't know if I said that earlier. Okay, well, if that's going to do it, thank you so much, everybody. I appreciate you joining me. A little Sunday scan action, and we will catch you all tomorrow. Have a great rest of your day. Thank you. Yep. Crashmas. We'll see you soon. Thanks, everybody.